Hi guys, this is Kwanele Mtoba. In this video, I'm going to discuss the introduction to accounting. So without wasting time now, let's get to it. Accounting. Accounting is particularly concerned with collecting, analyzing, and communicating financial information. And the ultimate aim is to assist those using this information to make informed decisions. Now, to start a business, you need money. So, in accounting terms, money is referred to as capital. So, there's what we call a starting up capital. It is made by those items that the business used to generate income. Those items are grouped or they are divided into 5 groups or 5 categories, which are assets, liabilities, income. 4, the expenses. The last one is the owner's equity. So let me start discussing number 1, which is the assets. Assets are those items of value which belongs to the business, which are used to generate income to the business, for the business. Now, assets are classified as either non-current and also the current assets. Now, what are non-current assets? Non-current assets are those items that belongs to the business, which the business keeps for longer than a year. The examples of those items that the business keeps for more than a year: it's land and buildings, furniture, equipment, machinery, vehicles, and also the investments, which are fixed deposits. So non-current assets are those assets that the business keeps for more than a year. Non-current assets are those items of value which the business keeps for less than a year. Non-current assets are kept for longer than a year, but current assets are those items that are kept less than a year. Which, let me start by non-current. The examples of non-current assets: land and building, furniture, equipment, machinery, and also the vehicle. Those items, they last for more than a year. So they are called non-current assets. And also the investment. Such as the fixed deposit, the money that a business invests for longer than a year. The money that a business invests for longer than a year. So that is a non-current asset. So a current asset, current assets, are those items that a business keeps for less than a year, which is stock. Stock cannot last longer than a year. Debtors, bank, and petty cash. So these are non-current assets and the current assets. So stock are the goods that are sold by the business to make a profit. So a purpose of a business is to make a profit. So stock are goods that are sold by a business to make a profit. So sometimes it is called an inventory. A debtor is a person who owes money to the business. Bank refers to the amount of money the business has in its check or current account at the bank. Refers to the amount of money the business has in its check or current account at the bank. Then the petty cash. The petty cash is the amount of money that a business has on hand to pay for those small items, such as stamps, toilet paper, milk, etc. That is a petty cash. Now let's go to group number 2, or the category number 2, which is liability. Liabilities. A liability, it is an amount of money that a business owes. It is the amount of money that a business owes. So also the liabilities can be classified as either non-current liabilities and current liabilities. So non-current liabilities are those amounts which the business owes but are repayable over a period longer than 1 year. So non-current liabilities, they take longer than a year to recover. So you cannot recover the non-current liabilities over a period that is less than a year. They take longer than a year to recover or to pay. Then the current liabilities, obviously, are those amounts that a business owes, but they take less than a year to recover or to pay them. So the examples of non-current liabilities is a loan, not just a loan, but a long-term loan, then a bond on property. You cannot pay a bond on property for 6 months. That is impossible. It takes longer than a year. It can take up to 3 or 6 years, maybe. But you cannot recover bond on property for less than a year. So let me explain further about the bond on property. When a business wants to buy property, the business will usually borrow the money from the bank. The bank will lend the business the money with the property as its security that the loan will be repaid. So that is called a mortgage bond on property. The bank gives you the money and the property to use it while you are still recovering the debt as the security that you pay the debt. Now, let's go to current liabilities. Current liabilities are those amounts that the business owes and are repayable within a year. So these are creditors. Creditors are those organizations or individuals that the business owes money, to whom the business owes money. So they are called creditors. Maybe the business bought something on credit. So those are creditors. Then the bank overdraft. The bank overdraft. The bank overdraft. The bank overdraft occurs when the bank allows the business to spend more money than it actually has in its check or current account at the bank. So that is a bank overdraft, to draw over. Then loan. This time it's a short-term loan. A loan that is recoverable within less than a year. So that is called a short-term loan. Then let's go to group 3 or category number 3, which is the income. The income. Income is the money that a business receives in money, or the amounts that the business receives. So the examples of income. The examples of income are sales. Sales. Sales is the amount received by the business for selling goods. The amount received by the business for selling goods. We said income is the money that a business receives. So income number one is sales, the amount that the business receives for selling goods. Then there is services rendered. Services rendered. Services rendered. Services rendered is the amount that the business receives for providing a service. There are two types of businesses. It's the sales business and the services business. So services rendered is the money that is received, or the amount that is received for providing a service. Then sales is the amount of money that the business receives for selling goods. Goods are tangible, but services are intangible. Then income number three is rent received. Rent received. This is the amount of money that a business receives for renting out assets of the business. For an example, when you have flats at your home or wherever you have flats, you are the owner of the flats. So you have tenants, you receive rent from them. So that is a source of income, which is rent received, because you are renting out assets of the business. Because those flats are the assets, they generate money. That money is called an income. Then income number four. Income number four, interest received. Interest received. Interest received, amounts received from the bank on money that we have in the bank. Maybe we have debtors. We provided a service, or we sold goods for credit. Now they pay later, so they have to pay an interest because they didn't pay on the agreed date. So there must be an interest that they will pay. So interest received is that kind of money, amount that is received on top of the amounts that the business already has, or the amount that is received from debtors whenever they paid later than the agreed date. Number five, commission received. Commission received. Commission received is the amount received for selling goods or providing a service on behalf of another business. So that is called commission received. Amount that is received for selling goods or providing a service on behalf of another company or party or business. Then there is discount received. Discount received. Discount received. Excuse my writing. There's discount received. Discount received is the amount received from creditors for early payment of the amounts owing to them. Is the amount received from creditors for early payment of the amounts owing to them. Maybe we paid earlier, so they decide, so the creditors decide to give us or to offer the business a discount. So those are income. Now let's go to expenses. Expenses are the costs incurred in or the costs that are required for something. For example, for buying stock or for renting or buying electricity, paying for water or paying salaries. Those are expenses. But I'm going to list some thereof. The cost of sales. We have cost of sales. The cost of sales is the amount of money paid for stock sold. Amount of money paid for stock sold. Then interest paid on the income. We had interest received. Now it is an interest paid. As I have said, that expense is a money required for something, required to pay for something. So this is an interest paid. So interest paid is an amount paid to parties who have lent money to the business. Maybe the business decided to take a loan. So the loan may be the lender. Maybe the lender decided to give us the loan with 20% or 10% interest on loan. So we are going to pay that 10%. So that is an interest paid. Then electricity and water. Electricity and water. And for bad debts. Bad debts occurs when a debtor is unable to recover his or her debt, so that amount is written off as a bad debt because he or she is insolvent. He cannot pay the debt, so it is written off as a bad debt, and that is an expense. Number 5, salaries. I assume you all know what salaries are. Then other expenses, insurances, fuel, repairs, and stationery. Now, let's go to the last category, which is owner's equity. Owner's equity. Owner's equity are those items or money that the owner decides, I can say, to donate or to invest in the business. Maybe, for an example, I started a business. Then I took my salary from wherever I work from and then put some percentage, some certain percentage from my salary, and decide to invest it in my business in order to buy maybe stock or add some equipment or whatever in the business. So that is an owner's equity. So that is called capital. That money, my personal money, when I invest it into the business, is called capital. So in the owner's equity, we also have drawings. I think drawings is an opposite of a capital, because capital is my personal item or money that I put into the business or I invest in the business. Then drawings are those items of the business that I utilize for my personal use, or it's when I draw money from the business and use it not for the business purposes. I use it for my personal use or for personal purposes. That is called drawings. I think my work here is done. Until next time, bye.